All right, you guys. So I'm going to go over the energy plays, and so what I've kind of started to pivot towards is for the midterm. So starting now through the winter time, the opportunities are not going to be in crypto. Um, and so what I've been talking about is building a short position in Bitcoin, and I will continue to do that. So as an overall strategy, what I'm doing for myself, maybe you guys can learn something, is I'm adding to these ETFs like 200, 300 bucks at a time short on altcoins when Bitcoin comes into certain ranges, right? So I'm building a position short on Bitcoin to hold through early 2023. Okay, so I'm short Bitcoin, and the real opportunities are going to be in the traditional market. And I've talked about this before. The idea being that energy is going to be the new Bitcoin. And if you're a savage and can understand some basic stuff, I will show you and kind of walk you through these energy plays. And so what you have here is this is just the cost of gas average across the country, pay at the pump. Today, oil prices rise after OPEC agrees to cut production by 2 million barrels a day, right? And so you see this big spike in oil. And so just like you traded Bitcoin or crypto, you can trade energy and these energy ETFs. And that's going to be my more, I'm going to go more that direction because I already know based on all the data and common sense that Bitcoin's going to hit those. It's going to come down. It could settle around $10,000 to $12,000. It could break beneath that. So I've already got confidence in my short position, but between now and then, the energy sector is where all of the plays are going to be. So if you like trading and you like volatility, then the place to go is over to the energy sector. Okay. So I'm going to show you right now we have the inflation data coming out next week, and there's this interesting thing I noted last time we had data. Last CPI came in just a little bit high, right? Not anything disastrous. What caused the panic was the core inflation, which is a different thing. But something a lot of people took note of, and I noted right away, was that inflation stayed at a level, but gas prices had come down. Okay, so that's an important core concept for what's coming up. So this is a monthly chart, okay? And so gas prices had come down, but inflation stayed the same. You would think that gas prices coming down, inflation should have come down. Okay, so you never know what's coming next, but the fact is that this month you can see from here to here that gas is creeping back up. Okay, and so as you look at the games going on in the world right now, OPEC today cuts production of oil, and what do you think that's going to do to oil prices? That's going to send oil prices into the winter up. Okay, so it's important to understand that these energy plays are still news catalyst, news driven, but we have a direction, so that's why I'm moving that direction. We have a strong confidence. The world is all talking about the energy crisis, and there's going to be a lot of volatility based on news. Okay, so just like crypto, you can do really well with it. So I want to show you UNG, and I talked about this play, and to the 4 people that listen to this, you probably ignored it. Don't ignore what I'm saying, man. Pick up what I'm putting down. These are solid opportunities that I'm going to show you. Just like trading crypto, man. We're looking for volatility and big opportunities. And so what I had noticed on Friday with this is UNP, the gas fund, okay, for natural gas, not gas you put in your car, okay? And you know the crisis going on. So on Friday, we had a gap down, which really caught my attention. that has partially to do with the market. So to teach you a little bit about this, just because energy is going up doesn't mean this is going to shoot up. So don't get the wrong idea. Just because energy is going up does not mean this is going to shoot up. This is going to trade along with the S&P. So don't miss that. It can be a little complicated, but I want to point that out. It's not a guarantee that if the S&P is selling off that this is going up. If the S&P is selling off, this is probably coming down. However, over the winter time in the long term, you're going to see all this volatility. Just like you like with Bitcoin, you're like, oh, you make 10% in a day. So I want to show you this trade. Okay, because I set this up on Monday morning, and right now I'm up, I think it's 9 point, I just checked it on the on my TD Ameritrade, and I'm up 10% on this play, right? And what I like about it is that with Bitcoin, there's so much, a lot of people call it manipulation, but the market makers are, there's a lot of short squeezing, there's a lot of leverage, it's very volatile day to day, and I like that. But what I like about these energy plays is that you have a sense of direction. So if you like volatility and you want to be able to hit a 10% play in 2 days, then you should pay attention to what I'm saying. I set my order here. It must be down a little bit, sorry. My entry is wrong. I gotta change this line. Sorry guys, that line is not accurate. So I set my order, okay? And in the Ameritrade account, it says I'm up 9.1%. This chart here says 8.34. So in 2 days, it's a very measured, kind of consistent play. It's not going to surprise and dump like Bitcoin could right now. Any moment, any day, Bitcoin could just fall off a cliff, or you could have a 5% pump. This is giving us excuse me, the advantage of sorry guys, anyway, so this is giving us the advantage of like having an actual market with actual leading indicators, working with the news, understanding what's going on with the data coming in from the Fed, and you have some real opportunities coming up. So these are the charts I'll be looking at. UNG, oops, sorry, and Boyle. Okay, so this is Bloomberg natural gas. This is a little bit more savage as far as the volatility. You got natural gas futures, so this will kind of tell me this is going to be a leader for UNG, right? And there's more, and I don't want to go into them all. I have a whole nother list of energy plays. But I just want to give you some idea of what is happening with energy and how to, a simple thing. You don't have to go deep. Just go right here, go to a TD Ameritrade, and you can see all the volatility. So if something popped off tonight or going into the winter, and I'm in this trade, I'm actively trading it, I could hit that move 20%. And the reason I'm saying this is because I know where Bitcoin is heading, right? It's heading to 10,000. Anybody can tell you anything. They can say whatever they want. I don't care about, I don't have Fibonacci lines. I don't need any of that. It's nice to have some basic price points, but the data from the Fed, the news-driven catalysts, and the state of the world is enough for me. So you have this UNG play. I'll be trading this frequently, and what I'm watching for, so going into Friday, what you're watching for is the jobs report. If the jobs report comes out and jobs are strong, still the market's going to rally, okay, which is going to pull this up with it. So we're kind of doubling down. You're doubling down on the energy crisis, and you're doubling down that the SPY's at a bottom, and this could really rip, right? So it's going to be pulled up by the SPY if, but what I like about it is the volatility to the downside of reduced risk to the downside with this. So if I get a leading indicator, let's say he comes out and they're like, the jobs report, is strong, and we need to cut more, which they're going to do. But the market, let's say the market on Friday starts to sell off. Well, at that point, I got plenty of time to go over here and just take profit on this, right? So if I hear the jobs report, I'll be listening, and it's like, hey, jobs report comes out, I'll just go over here, click and sell, and then it'll probably come back down. We'll see what happens with the market. But this isn't going to have one of these capitulation style. We're going into winter, first of all. So if you were just trading under normal circumstances, you'd be buying low, selling high. Just common sense, right? So for this to, just to give you a range, could this dump 20%? Sure. Is it likely? Not really. It's pretty unlikely going into wintertime that you're going to get a 20% dump on UNG during a worldwide energy crisis. You feel me? So you're trying to reduce risk, and you're trying to leverage, and you want to be able to, the reason I'm trying to teach this is because you want to be able to feel some relief when shit hits the fan. So that's what's really important. When the shit hits the fan, you want to be in a position where you may not be making a shit ton, but you'll be in the right plays, and these energy plays are going to be that, and then short on Bitcoin is going to be that. All right, guys, peace.